Hi, thank you for joining this mini webinar. It's going to be really crisp and short to the point webinar. Before we get into the presentation, let me just take a couple of minutes to introduce myself. I am CA nrajca, Chartered Accountant by qualification, a teacher, trainer by passion. I started my career as a banker, credit analyst with State Bank of India, worked for a period of 4 years. In very short period, I had the opportunity of becoming team leader, credit processing cell. So worked on 250 plus projects. It's 5,000 crore plus size. Then came out and started my CA practice, had my practice for a period of 7.5 years. Alongside had this teaching training. Thanks to technology, today through online, I teach 2 lakh plus students all over the world, basically on banking, credit and financial analysis, and majority of them are working banking executives. I'm really glad that my courses are helping them, and I'm sure this course will be relevant and useful for you as well. Let's get into the webinar. In the previous session, we have seen the split up of cost of project and means of finance. In the cost of project, the first one was land. Okay, so in this session, we are going to discuss about cost of land and various aspects related to that. Right. So you will be mentioning about the land amount, but you have to give a write up about land on various aspects. To start with suitability. The land what they have selected, you have to talk about the topographical features, whether soil test has been conducted, because if you're planning for factory, then heavy plant and machineries and all have to be installed, and whether the land what they have selected has capacity to withstand all those, whether soils test says that yes, at this place this kind of factory can be constructed, whether such kind of data or details are available. Okay, so that should be written or brought out in the proposal. Then the transport facilities, because the land sometimes or many times the factory land and all will be very in a remote place, distant from a normal town, or very distant from even villages. Okay, so what kind of transport facilities are available? What is the proximity of the land site to railways, to port, to airport? Okay, railways attains importance when the goods are going to be sold in domestic market, and the proximity to port and airport gains its importance when goods are subjected to exports. Okay, when they are planned for exports, what is the proximity? Okay, so that should be addressed in the proposal. And we should also talk about proximity of the land to water, because if it is going to be a factory and substantial laborers are going to work, or if it is going to be a factory where you are going to manufacture a product which is going to consume substantial water, whether water is available. So what is the source from where you are going to get? Is it going to be from well, or is it going to be from nearby rivers, or is it something you are going to arrange from outside sources? Okay, so that should be explained. And proximity to power, okay, because if you are going to be in very remote place, whether electricity board they'll be able to supply power. Okay, whether this project will be able to kickstart its production without getting power, absolutely no. So whether that feasibility is done, whether electricity board officials or electricity board has given their consent to start factory, whether they have agreed in principle to give electricity connection, that should be brought out. Then proximity to labor, I mean, whether laborers will be able to come on their own to this factory, or whether any arrangement can be made, transport arrangement can be made, so that they can go and pick up laborers, or whether the laborers are from very distant location, how long they'll continue, whether attrition are expected because of being very remote from normal place. Okay, all those aspects should be addressed. Then proximity to raw material. What is more important is raw material, and if raw material are not available in nearby places, or if no arrangement to get the raw material at this spot, it's going to become a mission failure. Okay, so what is the proximity to raw material and what is the proximity to finished goods market? Okay, so if the products are perishable, then proximity should be close, and if the products are non-perishable, then it can be even in a distant location. But what is the proximity level that should be brought out in the proposal? Then details of what is the extent of land, how many cents or how many acres, location details, where it is located. You have to give those ward number, survey number, and whether the land what has been selected now for this project is adequate. Adequate in the sense whether it is adequate for the present requirement. Okay, adequate for present requirement and whether it is adequate for future expansions as well. So that should be brought out, and whether the land what is selected, is it an agricultural land? Because generally on agricultural land, banks they cannot create an effective charge. Okay, in the event of enforcement, they face a lot of difficulty in enforcing them. Many times they cannot enforce it. So what is the kind of impact it's going to have on the project? So that should be brought out. Then you should examine the title to land, whether the land is freehold, whether there are any disputes on title of the land, and whether it is leasehold. If it is leasehold, you should scrutinize the leasehold agreement, and you should specifically check whether lease agreement is providing for mortgage of leasehold rights. Okay, if it is freehold land, the bank can take create what is known as equitable mortgage. Okay, whereas in case of leasehold, what they can do is they can create mortgage of leasehold rights, but lease agreement should provide for it. If lease agreement is prohibiting or blocking that, then that cannot be, I mean, that leasehold land cannot be funded, or lease agreement itself should be modified to provide for this clause. And whether the lease period is long enough to cover the loan period, that's more important. Let's say loan period is 8 years and lease period is 5 years only, then 3 years bank have to stand unsecured. So that cannot happen. Lease period should be long enough to cover the loan period, and lease agreement should be scrutinized very carefully to check whether there are any clauses which are prejudicial to the bank's interest. Okay, then comes cost of land. Cost of land details have to be given in the proposal, and this can have inclusions like cost as per sale deed. Okay, cost as per sale deed only can be considered as cost of land, and it can have inclusions like registration cost, cost of leveling the land, cost of fencing, cost of compound wall, and what's more important here is this is not followed by all the banks. Okay, some banks will confine themselves to this level, cost as per sale deed. They'll not look at any of this. But the bank who wants to wholeheartedly support a business, they consider all this and they treat everything as cost of land. Okay, aggregate cost of land. And in proposal, you have to comment whether the cost of land is reasonable or not by comparing it with the price of similar lands. Okay, then comes issues. Okay, there can be issues or there can be delay in land acquisition, maybe because of environmental and forest clearance, or maybe because of rehabilitation or resettlement. Okay, if such kind of issues are there, please bring them in the proposal for the notice of sanctioning authority, and eventually you have to give justification for this selected land. That is why banks should fund this borrower to buy this land as part of the project or for the project. What are the merits? Why this land is demanding, or why this land should be funded so that the borrower can start the project. So much we have come to the end of this webinar, and I'm sure you would have really derived value from this short and crisp webinar. If you wish to continue this learning journey, I have an amazing opportunity for you. I have published several courses on banking and financial analysis area, each course costing 2000 rupees. but for you, I'm going to give you a special offer. Here we go. Banking Credit Courses Bundle. This includes course number 1, Banking Credit Analysis Process. It's a comprehensive course with 200 plus lectures. It covers financial analysis, working capital, term loan, LC, BG. It's a comprehensive ever course. Then we have course number 2, that is how to carry out financial analysis as a banker. This is going to focus exclusively on financial ratio analysis, cash flow analysis, and fund flow analysis. Then comes course number 3, how to carry out term loan appraisal and analysis as a banker. It's a comprehensive course focusing on the technical aspects around project finance and term loan. These are all the topics. Then comes course number 4, how to prepare CMA report for bank loan through 8 sections. This course will take you through entire CMA report preparation process for bank loans. Then we have course number 5, how to read balance sheet. So if you are a non-finance person, this course will give you complete insight into balance sheet, how to read them, how to interpret them, how to analyze them. Okay. Then we have course number 6, how to read CIBIL report. By taking this course, you will get a complete picture of CIBIL report reading process. Then we have course number 7, how to prepare cash budget for bank loans. This course will help you to understand the concept of cash budget, which is widely used in short-term lending like ad hoc credit facilities, letter of credit and all. So far, I have introduced 7 courses of 1,999 each. It means 7 courses of value 13,993, but you are going to get it only for 2,599, and it is not yet over. I'm going to give you some more bonus. Course number 8, Collateral Securities, a comprehensive study. Course 9, how to carry out credit risk rating for non-trading entities. Course number 10, in this course you will learn banking credit analysis through various case studies. So now it is 10 courses of value close to 20,000, but you are going to pay only 2,599. It is not yet over. Some more bonus. Course number 11, how to read audit report. Course 12, this focuses on letter of credit, and course 13 focuses on financial analysis in very short duration. So you have 13 courses of value close to 26,000 rupees, but you are going to get it for just 2,599. So it is basically 7 main courses, and you are going to get another 6 complimentary courses, 6 courses as bonus. So overall it is 13 courses of value close to 26,000 rupees. It's 1,500 plus lectures. You get lifetime access for all these pre-recorded courses. You can access them in desktop, laptop, mobile, iPhone, iPad, and the overall cost is around 26,000, but you are going to get it only for 2,599. So this is a once in a time opportunity for you. Enroll now. I'll see you inside the course.